Welcome to Idea to IPO. My name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many, many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 500,000 members among all our meetup groups, all around the world. We've organized, promoted, and produced over 4,200 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. Thank you. Thank you for all your support. We hold venture capital panels, legal workshops, networking events, and more. We hold an event every day of the week. Check out our schedule at ideatoipo.com. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the greater San Francisco Bay Area? Right. Who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? Like 7 of you, that's like a record. Well, welcome natives. So whether you were born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important because we know many entrepreneurs are struggling financially. So we make sure our events are free or affordable. And if you cannot afford to cover charge for whatever reason, come talk to me and we can work something out. And at most of our speaker events, we make sure that we provide a delicious buffet. Is that a delicious buffet? Come on, is that a delicious buffet? Well, I want to thank Procopio for partially sponsoring that delicious buffet. More importantly, though, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Besides our moderator and our panel and this young man. So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do. Law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. Tonight, we're grateful to Procopio, once again, for hosting us at this beautiful venue. Is this a beautiful venue? Siri, is this a beautiful venue? So let's hear it for Roger and Procopio and Siri. Applause.
How you all doing? So 2 people enjoying themselves. How you all doing? All right. Well, welcome everybody. Rob, once again, fantastic turnout, fantastic panelists. Just to pay for dinner, I'm going to tell you 30 seconds about Procopio. It was formed in 1947, and no, I wasn't the founder. Someone asked me that a few weeks ago. Obviously, I haven't aged very well. But it's a full-service law firm, AmLaw 200. I head up our emerging growth and venture capital practice group. So I deal with companies from initial formation all the way through the life cycle of the company, from friends and family, seed, angel, and M&A and IPOs, and everything in between. I was an entrepreneur for 10 years before I became a lawyer, so I have sort of a unique perspective on what it takes, from your side of the table. Once again, thank you, Rob, and welcome everybody, and I'll turn it back over to you.
Applause. Some of our other partners are here tonight. I would also like to have them say a few words. Let's hear it for Ken and Cordify. Applause.
Thanks, Rob. Hello, everyone. My name is Ken. My company is Codify. We do software development services for startups. So we do everything from ideation to MVP and everything beyond. Startups we have so far, we've been in the Valley for about 10 years now. In this service, I've been in the Valley for more than that. We have helped more than 30, 35 startups come from ideation to MVP and anything beyond that. We do services, anything that you need, especially for entrepreneurs who are starting new. Having a technical co-founder is an important part of the journey. So while you search for your technical co-founder, your technical work has to go on. So we offer services like a fractional CTO. So come and talk to me over there if you want to know more about my fractional CTO services. Thank you.
All right. Next up, we have Wallace from Metis. Applause.
Thanks, Rob. 8 years ago, I was on the stage talking to Rob about launching a business, so I understand, those of you in the entrepreneur situation. But my name is Wallace. I launched a company called Metis. We're a real estate brokerage that helps you get into traditional housing and startups into office space. If you want to have a frank conversation about housing or office space or your needs, feel free to reach out, and a couple of my team is back here as well. Thank you so much.
Next up, we have Anita and Happiness Factors. Applause.
Thank you, Rob. I can't even remember how many times I have done the announcement ever since I started my company 5 years ago. So I'm Anita, founder and chief strategist of Happiness Factors, where we are building the bridge between AI, mental wellness, and holistic best of the East and West to offer total solutions for the busy professionals. And we are not just apps like Headspace. We have courses, coaching, workshops, and everything is customizable according to the client's needs. We currently have 5 paying clients and going through the seed round of funding. So if you want to get happier without any drugs, alcohol, or marijuana, reach out to me. It's all based on AI and all available wherever you have a smart device and an internet connection. Thank you, Rob.
So though our mission locally in Silicon Valley is to support entrepreneurs here, our global mission is to democratize entrepreneurship and innovation all around the world. So to that end, we maintain a robust YouTube channel, youtube.com/idea to IPO. Check it out. We have tons of videos there. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Our partner in that endeavor is Pacific Bay Media. So let's hear it for David and Pacific Bay Media. So here's the schedule for the rest of the evening. Our panel will hold a brilliant, compelling, dynamic, entertaining, and scintillating discussion, right? That's the plan. And then at 8 o'clock, we'll open it up to questions from the audience. At 8:30, we'll end the program. You can stick around, network, talk to the panel. At 9 p.m., we'd like to leave the building as a courtesy to Procopio. There is an after party. The possibilities are the Rosewood, the patio, or Pizza My Heart. And maybe an undisclosed location, but more on that later. So without further ado, I'm going to hand it off to our distinguished moderator, Roger Rappoport, partner at Procopio, and our awesome panel.
On my left is Sheetal Nariani, general partner, Global Health Impact Fund. Next to Sheetal is Jessica Karr, founder and general partner at Coyote Ventures. Next to Jessica is Ella Lee, founder and CEO of 7 BioCapital and a venture partner at Network VC. Next to Ella is Anna Chukaeva. Did I got it? Okay. Principal at Alta Holdings and also co-founder and president at Carta Healthcare. And next to Anna, last but not least, is Shubhra Jain, head of healthcare investments at Tarsadia Investments. So what I'd like to do really quickly is if we could just go down the panel. We've got so many topics to cover. This is such an incredible area. Just if you could give us a quick background, what you've done in a prior life and how you got to where you are today. 30 seconds.
So right now I'm in VC, but this is a relatively new career for me. I've been in the VC world for only three and a half years. I moved to Silicon Valley 6 years ago from the Middle East. I spent a huge part of my early career in the pharmaceutical industry, in the emerging markets with huge corporates like Novartis, Vocard, Cipla. So this transformation was something I desired. That's why I chose Stanford and Silicon Valley to live in. And it's been going great. I had to change my thought process quite a bit, but it's been worth the journey.
Great, Jessica.
I'm the founder and general partner of Coyote Ventures. We launched in 2021. My prior life, I was a biochemist, early employee at Impossible Foods, where I worked in R&D to help and develop and launch the burger, and then worked with a lot of entrepreneurs before I realized I really wanted to be on the investor side. So briefly worked with a fund and became really obsessed with women's health solutions, and that's what I work on now.
Great, Ella.
Yeah, so I'm the founder and CEO of H7 BioCapital. So under the company, we have three arms. One is a venture arm. Later, I'm going to introduce about the investment theme. Second arm is a seller return arm that is helping the early stage from C to A stage companies to accelerate. The third arm is a community. We do a lot of conferences, a webinar. Actually, in December 8th, we're going to run the Silicon Valley Investment Forum, and also on Monday during JP Morgan week, we're going to also do an investment forum as well. So myself is a scientist turned venture capitalist. So I had more than 10 years experience in biotech sector, and I switched to the VC sector many years ago. So it's really glad to be here.
What were you doing in the biotech sector?
So my research background was focused on metabolic disease, like aging, diabetes, obesity, exercise physiology. Actually, I was leading several projects. So yeah, I can tell more story later.
Okay, Anna.
Hi, this is my second time in finance. First time in finance, I solved a math puzzle, and the head of emerging markets at Credit Suisse hired me into sales on the trading floor. Now, that's my second time, but I kind of think that I identify as a builder. I did 2 startups before, and the last startup, Carta Healthcare, was in HealthTech. And on the side, I'm really passionate about helping other female entrepreneurs navigate the entrepreneurial journey.
Excellent, thank you. Shubhra.
Hi, everyone. My name is Shubhra. I am a physician by background. I started my career on the clinical side as a primary care doc. Moved over to the industry as an operator, led product for a healthcare technology startup, building software as a service solutions, selling to hospitals and health systems. So if you're building something in that space, been there and very familiar with the pains. And now have been an investor for a little while.
Anna, tell us about your fund.
So yeah, the firm is primarily investing in private equity and hedge funds. And my job is to figure out how the venture ecosystem is evolving and see if venture is a good asset class to get into right now. So the expected check size on the venture side is 20 to 50, if that happens.
And that's at the Series A stage?
No, it's in the venture fund.
Oh, in the venture fund.
Yes.
So stage-wise, we invest mainly in C round to A round. Our check size actually is pretty small after after them. So varies from around 300,000 to around $3 million. The theme is including the life science, biotech, device, and also digital.
And you guys normally lead? Do you follow?
We don't lead.
Okay,
Yeah.
so you're already syndicated.
At Coyote, we do mostly seed stage. We'll do pre-seed. We've done a few later stage, and typical check size is around 100K, so definitely going down check size here. We do not lead. We can do like pre-revenue, but we want to see like a product or an MVP. We don't like to invest a lot for them to do product development. Usually there's something built. Yeah.
So at GHF, we basically go for anywhere from pre-seed to Series A, early stage primarily. Our focus areas are digital health and medical devices. Our check size will anywhere go from 300 to 400,000, right up to 1.5 to 2 million. That was what was typical for our Fund 1, and it will be similar for our new fund that we launched. And we not adverse to leading, but we haven't done a lot of that. We just led one round for in one of our previous funds.
Are there any particular sectors that you guys are focusing on?
Digital health and devices.
Within any verticals within that?
So yes, we tend to focus a lot on platforms. That is one of our favorite areas. Another is oral health. We like to go in that area. Women's health. Platforms. The network, our own, yeah, healthcare platforms. Our network, our main portfolio company itself is our main product. So yeah, that's the area.
Great. So just going to open it up to the panel now. Yeah, I think the topic was what's hot, so we're definitely going to cover that tonight. One of the most exciting health tech trends that you guys are seeing in the last year that have really gotten your attention or that are grabbing investors' attention? Jessica.
I was waiting for Anna to talk about AI. So obviously that is integrated in most of the deals. In terms of trends, I would say our thesis is a lot on consumer health. And so I think a lot of like 23andMe as an example to start taking health data into your own hands. So a lot of that in our thesis is like understanding your biometrics, how to personalize that to you. I think those are interesting. That's being leveraged a lot for healthy aging as a trend. So those are a few examples. And I didn't say I'm focused on digital health for the most part at this point too.
Ella?
Oh my God, AI.
Ada?
Okay, so, well, I have to talk about AI right now. So I do think that now with AI, AI has been there for a while, but now it got everybody's attention. There's a lot of investment. And I think my company was selling to providers, hospitals. And the problems with hospitals is not about data analytics or lack of that. It's a data capture, because before you really do something with the data, you need to capture this. And the opportunity for the AI tools to capture this, I think, is incredible at the point where data is produced, not at the point where it was entered in various places in electronic health records, and it's not necessarily super reliable. So I feel like audio, video tools will definitely lead to higher quality data and better solutions for patient care. That's pretty exciting.
Well, one of the trends that I see, this is by no means the sexiest or and by no means good for our industry, but one of the big trends that I see is physician burnout and provider burnout, especially after COVID. Many of us who have practiced clinically have started feeling it, and I'm seeing a huge exodus from the industry of providers in general, all kinds of allied healthcare professionals and physicians included. And if we don't figure out a solution to that as an industry, then where do we go? So there are definitely technology solutions that are trying to address that, and seeing a lot of that in the companies.
So where do you see sort of the low-hanging fruit for, assisting physicians to prevent this burnout?
I think there are many avenues, allowing them to practice at the top of their license. So integrating various other allied health professionals in the care journey of the patient in a way that they don't have to answer every logistical question of the patient. They don't have to coordinate social services for the patient. They don't have to figure out which hospital has an empty bed so that they can refer the patient safely. And there is somebody else involved in the care journey of the patient who's able to do those things. A big one is documentation, building tools for them that don't take 27 clicks and 50 screens to get through to the most basic relevant information for the patient, right? Like just keeping them at the center when we are designing technology to be used in the hospital systems is another big one, I would say. The third big one would be, as a doc, you are constantly learning about the new advances in medicine, in science, and how do you stay updated at the rate at which papers are published today, at the rate at which information is being created and disseminated today. It's a huge task for all of us as physicians to keep in touch and stay updated. And if there can be technologies that make it easier, that make it more customized, more real time, for us to be able to access the information that is needed at the point of care at which we are making decisions, without us having to go into a library and look up a catalog every single time, that would help.
But from a startup perspective, I mean, that's sounds amazing. But how, as a startup, do you crack the code, getting hospitals to trust you and physicians to trust you and getting through sort of all of the red tape? There are probably so many startups that get fantastic products built, but really it's a question of, breaking these barriers. So how can startups get into this?
Well, there is certainly a big valley of death, and Carta has gone through that journey, right? Like, it's not an easy task, and it's not for the faint of heart to sell to hospitals and health systems, and to sell to even more independent practice physicians. That said, it is a very sticky customer base. If you get in, the chances of getting ripped and replaced are very low, and those are long contracts, renewed very often, and it's hard for them to replace technologies very often. So it's a great high-quality revenue stream, even though the sales cycle is long. So there is some incentive at the end of the tunnel if you're getting discouraged in the sales cycle. In terms of how do you do it, one big one is involving them into the process of building the business and building the product and engaging with them as you're designing the product so that it's built with them at the center of it, and they have a sense of ownership, they have a sense of engagement and involvement, and they know that it works with their workflows. Changing physician workflows is a very, very hard thing. So if there is common understanding that the product will fit into their existing workflows, leading to minimal disruption and will significantly either give them leverage on their time or improve patient outcomes, then I think most docs are very motivated these days because they're scrambling, they're looking to anything to survive in this environment.
As VCs, as investors, when you're looking at a company that's tackling a market like this, where sales cycle is going to be incredibly long, yes, if you crack the code, you've got an amazing customer, but are these investments that you would look at, and do you find them attractive investments, knowing sort of the sales cycle and what it's going to take for adoption, at the clinic?
So, yes. I mean, the short answer, yes, I would take a chance. And what are the factors that I would look for? What is the value-added service that the startup is providing? I completely agree with Shubhra's perspective. How are you making the physician's life easier? How are you making the patient's life easier? When the pandemic happened, our biggest need of the hour was communication, logistics. We didn't have a system in place. So if you just had even a simple video platform or a scheduling app, it went through because that was the need of the hour. Now on the other side, yes, the pandemic is not over, but we have started meeting each other. We have started talking to each other. We do need the logistical and the scheduling help, but we also want a little more value. We want what makes physicians' life easier. So the sales cycle will be long. Make no mistake. There will be a lot of regulatory guidelines if it is a device, even if it is a platform, there will be a lot of loopholes to go. But how viable is the MVP? And most importantly, have you involved the end consumer in the development stage? If it's it's a platform, yes, we need the technical support, but is a clinician, are their opinions in the picture? Are the end consumer's opinions in the picture? If all these factors are in place, I would invest. I would be happy to be a little patient if the path to monetization is being followed in this fashion.
I think, Anna, you had something?
Sure. Well, we actually started as a company selling to providers, and for us, we would ask providers, well, do you want to be our first customer? And they would say, no, absolutely not.
Do you have any other customers or pilots? So that's a challenge, right? Somebody needs to be the first. And I would say if somebody doesn't have a development partner and they are going to sell something into hospitals, you need to have a hospital development partner. Investment aside, you need to build the business. That's more important than getting an investment. You can't build it without a development partner. So the way we approach that, and I think this could be repeatable, and that's definitely interesting, is in healthcare, as you may know, clinicians sometimes start services businesses. And they would have 2, 3, 4 paying customers, and they're not necessarily scaling that business. They are being clinicians and having a business on the side that serves other people. That is kind of how we were able to crack the code, by actually buying a small services business and getting started with providers.
You're talking about AI. It just seems like there are some really incredible opportunities in health tech and biotech. And, there's a lot of activity in vascular. And I think it was Lucid that recently raised about $22 million. They were building these 3D models of arteries so that physicians could, correctly place stents. So, given AI's really transformative potential in diagnostics, drug discovery, personalized medicine, where do you folks see the biggest growth areas in the next, say, 5 years? And conversely, where do you believe that AI may just be overhyped and really just may not deliver on its promises in health tech? Ella, you're chomping at the bit.
Yeah, so I would say, of course, like everybody is talking about the ChatGPT from this year, and the big application of AI in drug discovery have been, many people pay a lot of attention starting from the pandemic time. But I would say you can say the overhyped, if you say something is overhyped, I would say AI in drug discovery for now, in a sense that there are still a lot of challenges. From our perspective, from the investor perspective, the biggest issue is first of all, of course, there's a lot of AI company are really working on this drug discovery space, but the issue is the data source. So when you have a lot of data coming from like a public, private, different location, different domain, it's really the biggest challenge is to really clean the data in order to train your algorithm. And that is cause a lot of issues for now. And of course, it's really the adaptation by, for instance, scientists and also pharmaceutical, which are completely conservative. You really need, right now there's a big gap to let the scientists to really understand or to be able to interpret the AI solution and the uses as a tool. So even though right now there's a lot of big pharmaceutical companies are really having their department using this AI to also screen all this compound for this virtual compound library, but really how much role is really play in the drug discovery, pipeline, that's right now is still a little bit of question mark. So I would say from that sense is a little bit overhyped. But in a way, that is also in a couple of years, we would see with also the advancement, with also a different component, it will play a bigger role. That is for sure. Another sector I want to comment is also AI's play more important role in patients recruitment in decentralized clinical trial. So traditional way is the patients like go to different site and also just do a bunch of, for instance, questionnaire and also collecting information. So with the application of AI, is really can minimize, for instance, the physical, subjects doesn't really need to spend all this time physically, for instance, go to different places, and they are able to screen, all those different subjects to get a better outcome. So that is definitely something we see there's also a trend moving forward. And of course, I didn't really have a chance to say actually for precision medicine also rely hugely on this genome data. So AI also really play an important role. So precision medicine later can also advance from oncology to non-oncology field. So it will be also the future trend.
And Jessica, you're very focused on women's health. Where do you see health tech and AI really converging, for women's health?
I think stage one we're still in is like collecting the right data and understanding disease states that have been less researched. A lot of the women's specific conditions have received historically less funding. One example of a company we invested in is a diagnostic for endometriosis. It affects about 1 in 10 women, but the cause is really unknown. So even doing mechanistic studies on like, why does this even happen? So I think it's still like, yes, they're doing single cell analysis of targeted genes. They're still collecting that data. This has never been collected before. So there's so much opportunity for AI once this data is collected, but it is like targeted. And even like with genome, it's like, yeah, that's helpful, but what about the microbiome? What about what's interacting in the microbiome? So I think that there is just so much data still in R&D before AI is even that interesting, in my opinion.
Are there any areas that you think are overhyped, when it comes to women's health and probably are not going to deliver?
So far, women's health has been basically about women having babies. So yes, maternal health is like really overfunded in my opinion, and fertility. I think that there's a lot of more like taboo areas of women's health that are like less understood and less funded.
What do you think the lowest hanging fruit is?
Oh, wow.
I'll let you think about it. If you want to think about it, we'll come back.
Let me think about it.
Okay. Sheetal, what do you think in terms of 5 years' time, we're looking back and going, wow, I called it.
So AI is definitely here to stay. But the most important aspect is it does not replace the current system that we have, at least not completely. It is as a support system to the current setup that we have. That is one of the, whenever people speak about AI, the first reaction is, oh damn, my job is going to go. I'm going to be laid off. No, that is not what AI is here for. AI is to support the current system. One place where I feel AI will be overhyped is AI depends a lot on clean data. If there's too much noise, the platforms, the AI will not operate. So this is very critical. And that is where if any system, just like Jessica pointed out, we still don't have enough data when it comes to so many of women's health issues. I completely agree with that point. If the clean data, if adequate data is not there, AI is not going to be effective. So that is where I think AI might have a failure.
So how do you folks think the pandemic has really affected health tech in general? We had Rajesh Swaminathan from Coastal, and he said that the Ukrainian war really transformed energy, and COVID really sort of had this transformative effect on healthcare. What do you think, in your view, the effects of COVID are going to be?
I'll start. So one of the things that COVID did bring about, it took away the proximity that we have with each other, the way we could reach out. It took away the traditional form of communication, diagnosis, treatment. It changed all of that, and probably permanently. So that is where, as I had initially said, we had to look at alternative forms of discussions, talking, and that is one of the reasons HealthTech came up so strongly in 2021, starting from the end of 2020. But that was also the initial panic. That is why HealthTech jumped up so much. And then we started seeing a bit of a cool down in 2022. Yes, the market was also not very friendly and supportive, but the initial hypes, the dust started to settle in 2022, 2023. So the changes that COVID has brought about we have alternate ways to reach out of treatment, remote patient monitoring. These aspects of health tech came out very strongly, which I think are here to stay. All the value additions, how to make, I mean, now when I want to see my physician, previously I never had a choice. It was always an in-person appointment. Now a video or a telephone appointment is an option. I actually have no copay. So insurance companies lined up, the healthcare system lined up, startups and innovation also came in line with all of that. This is the change that the pandemic brought. And that is the positive change. But yes, I wish we didn't have to have a virus to bring that change.
So I would imagine that most people here are looking for money, or if they're not right now, they will be. So what advice would you give to the health tech entrepreneurs in the room tonight that are looking to secure VC funding in today's environment? You know, it's challenging, definitely very different to what it was a couple of years ago. So what advice would you give these budding entrepreneurs?
So maybe I can start. So there are definitely several things. So first, you need to really know why you're raising fund and how much you're raising and the use of the fund. So you need to know, for instance, truly, do you really need that much money, especially in this challenging time? And whether you already have a product, whether you already done your customer market fit. So this is extremely, extremely important about really what's really the reason you do the fundraising. Second part is before you go do any fundraising, do your job. Do some research on the venture or investors that you're going to go after. See whether they are first of all, you want to see whether they are the financial investor or strategic investor, and whether you guys are in the same, for instance, they're looking at the stage, the same stage, and also the same sector of your company's at. So this is also really important. Maintain a really good relationship with the investors who even reject you. This is also really critical. So a lot of times after all this company would receive a lot of, from positive side, you would receive some email, but in a lot of scenario, you're just doesn't hear from them. So I would always say then you should still send some follow-up email and kindly ask them the reason that they are not, you don't really fit into investment theme. Most of the time they may not really send you some really detailed information, but it's also really great to keep this conversation flow going. And then, for instance, on quarterly basis, send them also the investor update, let them know how you're doing. And also, of course, if you have a chance to see the investor from others, from a different location, always say hi to them. Keep a good relationship with them. And also, you need to really pay attention for how you, like every time when you have an opportunity to pitch to the investors, then you really should take great advantage of this opportunity. So there's a lot of computation or pitch roadshow out there in Silicon Valley. Some computation maybe 2 minutes, some maybe 10 minutes, 15 minutes. You really need to polish your deck, and then kind of like you should practice, be able to deliver, let's say, elevator pitch, and then in even 2 minutes presentation, list all your the point investors looking at, including, for instance, your validation, like your revenue, your pilot study, your partnership, and what you have done, how much you're raising, your competitive advantage. I have seen so many companies that are doing horrible, especially when the team are really, most of them are scientists or engineers. I'm also a scientist, I'm a PhD. I know, like when you see, a PhD deliver, I definitely tell, this is a PhD deliver, a presentation. So you really need to make sure the investors who are not coming from your field can still understand that. So you need to be able to tell the story. So those are the different elements to pay attention.
Shubhra, how about from your standpoint, what advice can you give the entrepreneurs?
I think for people who have spent some time in the healthcare industry and are now choosing to go build something, hopefully to change something about the status quo that exists, the first thing you have to do is try to unlearn and look at things with fresh eyes and give yourself the confidence that you can potentially change something in this 100-pound gorilla that feels very difficult to change. That is our healthcare system. But for the people who are coming from outside the industry and have been coached by the Silicon Valley to move fast and break things, and are now trying to build something in healthcare, please take the opposite view and understand that healthcare moves slower, it's more regulated, the risk of doing something wrong is much higher, the impact that you will see from making wrong decisions, which will be much worse and could kill you or your patients or your company. So be a little bit more measured, take the time to learn what the industry is about, try to ride on the shoulders of giants, surround yourself with advisors and co-founder or executive team that comes with that industry experience and has that view. I would start there. It's not specific to fundraising, but it's about building a business in healthcare. On the fundraising side, when you're meeting with an investor, you are selling the vision, you're selling the business, but at the same time, you're building a relationship. And it's important to know that the relationship comes before the sale, always. You have to keep the relationship at the center and not let the sale, closing the sale, get in the way of building the relationship.
You raised an interesting point for entrepreneurs understanding, if they've come from a tech background, that it's different. From a VC's perspective, do you think VCs in the tech space look at deals differently to the way you folks do in the healthcare space?
Absolutely.
What are the biggest differences?
Let me clarify the question first. Tech VCs looking at a healthcare deal look at it differently, or tech VCs looking at a tech deal?
I'm sure a lot of people here have been in tech companies and maybe now going into health tech. So they may have pitched to, tech VCs. So tech VCs looking at tech deals as opposed to health tech VCs looking at health tech deals. What's sort of the difference?
I think the knowledge and understanding of the industry, the existing workflows, the existing regulations, the processes, the different stakeholders involved in building the business is much more important to us as healthcare VCs or investors than for tech VCs. I think tech VCs, at least in the Silicon Valley, for the longest time have believed that if you're building something cool and interesting, then that will sell. It doesn't always happen that way in healthcare. I like to think of it more as you have to focus on and very well understand the problem first before you jump to it. You can't be building a hammer looking for a nail. So too many people are driven and excited by some cool new technology, and they want to find an application for that technology, and they're looking for some problem to solve using this technology that I have learned about. That may or may not work in tech, but I don't think it works in healthcare. I think you have to start with the problem and really understand the pain point very well.
Something that Ella said, go slow, be very methodical, explain, because the VCs may not really get your space or have that understanding. From an entrepreneur's perspective, should that be a bit of a red flag if the investor doesn't really have conviction in the space or deep domain expertise in that area? Is that a good targeted investor?
I can answer that. It depends on what you're looking for from the investor. If they're just part of a syndicate and you have other people around the table who have that domain expertise and knowledge, then that could work. If you yourself don't have any domain expertise or knowledge and you're looking for someone to help you with that, then it becomes all the more important to surround yourself with investors who understand. At the very least, just make sure that they understand that healthcare takes a little bit longer, but obviously there is a massive market and opportunity, but that their expectations are realistic in terms of how much capital you're going to need to build the company or how long it's going to take to an exit or what are the potential exit opportunities. They understand what they're getting themselves into at the very least.
But I guess where I was going was even if the entrepreneurs have a real, great grasp on the subject matter, they have real deep domain expertise, if you don't have an investor that really has that domain expertise or has conviction in terms of what you're doing, can that not lead to a real misalignment
Yeah.
of interest down the road?
You should never take money from an investor who doesn't have conviction in what you're
Yeah,
doing. That is
absolutely.
irrespective of what kind of company
Yeah.
you're building in what space, right? They'll just be painful.
Yeah.
So that is, besides that point though, on the domain expertise, the only caveat there is most companies are built at the intersection of many different fields and require many different domains of knowledge. So if you're building something at the intersection of healthcare and B2B SaaS, but this person has like really extensive B2B SaaS experience, or if you're building something at the intersection of healthcare and AI and they have a PhD in machine learning and have invested in 5 other AI-based companies, then they can help on that side of the business, right? So it would be an oversimplification to say don't take money from anyone who has spent less than 10 years in healthcare.
Anna, I know you got some. Anna?
Well, I think you got to think about signaling too, right? You're raising money, you want to put the best people who are qualified to help you with that. And now, if you're putting somebody, especially putting on your board, somebody who doesn't appreciate the sales cycles in healthcare, for example, if we're selling to providers or payers with complicating decision-making, you're creating a problem for yourself. So it doesn't mean you shouldn't do it. It's important to understand what the consequences are of that decision and be prepared to manage the risk.
Yeah. So maybe Jessica, you could kick us off. What are some of the biggest mistakes that you see consistently entrepreneurs making over and over again in their pitching or their fundraising strategy?
I think starting out, don't just do a ton of untargeted cold emails. That annoys all of us. I think you can start with some deliberateness in who you're reaching out to. If you're doing your first round, it is good to have sort of like angel investors, friends and family, launch round, whatever you want to call it. Have some funding first committed. There's not a lot of like funds who will be the very, very first check-in. I've been the first venture check-in of a couple of deals where they have like really great angel investors first. So I would start there with some individuals who are really value add, who would be like, wow, they have like Adam Grant on their cap table already. That helps get attention. So try to get those first. Warm introductions. It is like hard to hear because a lot of people start off without a network, but we're all here to build the network. So warm introductions just really matter. I get hundreds of emails every day and I literally can't read all of them. If it comes from Shubhra, I will 50% of the time read it, but just kidding. So yeah, warm introductions really help. So I think, I turned the red flag into some advice, but.
And in the pitch, anything that, besides TAM is X gazillion, we're going to get 1%. And
That's definitely one.
But
when I'm doing a first meeting, I just do 15 minutes and don't get offended if somebody gives you 15 minutes. That's a good thing. You say like, hey, I look at the deck ahead of time, I have some questions. I usually don't want them to share their screen and go through their pitch because that takes forever and I've already read it. So that's one thing, is be like, hey, do you want me to go through the pitch? And if you do that, like, you should definitely be prepared and have a strong presentation. And then, things like, oh, we can achieve 1% of TAM, that's total bullshit. You just go from the ground up with your assumptions. Say like, hey, we have like this angel investor or this advisor and they're working with United Healthcare and that's going to be our first paid pilot, and like kind of build from the ground up your projections. And then before you launch the fundraise, definitely have a data room ready, have your financial projections. I look like at 5-year revenue or more. So I see a lot of people who only think 1 year ahead, which makes no sense. We're like long-term investors. So get your data room and long-term projections ready too.
I think also a huge turnoff for me is we're raising 2 to 5 million. Yeah. Is it 2? Is it 5? Do you really know what the inflection point is, and do you know how much you need
Always
to get
start
to that
with-
inflection point?
Always start with the lower number.
Yeah.
So no matter how much you try to, you should make every attempt to come up with a very tight range. But even then, it will always be a range. You're much better off starting with the lower number, and then you can always say we were oversubscribed and we ended up taking a little bit more money. Makes everybody around the table feel a whole lot better than we started raising 10 million and we have 1 and we couldn't fill it out.
I guess, very often though, you can look at the plan, you can look at the inflection point and say, is this a realistic number to get from where they are to that next inflection point? Because if you don't achieve it, if you're raising too little, you're going to be dead meat for the Series A. So what are some of the biggest mistakes you see entrepreneurs consistently making, Sheetal?
So for a second, I'm going to take off my VC hat and put the CFO hat on. Yes, I want to see the financial model. I definitely want to see. Now, here is what I'm looking from. I'm not looking for accuracy. But what I'm looking for is the confidence and faith you have, the thought process of how you're going to get to that monetization. How have you thought about your pricing? What is your target audience? Where is the flow coming? The funds that you're raising, how are you utilizing them? That is what I'm trying to see. I just want to see a thought process. Yes, you will pivot, you will change plans. All startups do. But if you are comfortable in building your plan and adapting and changing and stress testing, you will be able to adapt faster, you'll be able to pivot faster. I completely agree with Jessica. I definitely want to see a 5-year projection. Is the 5th-year projection realistic where we sit today? No. I mean, 99% the number is going to be very different. But I want to see where is the thought process going. Are you thinking that far ahead in the future? Or are you just thinking 6 months? Are you just looking at this funding giving me 4-liner Excel of $2 million, 4 line items, this is what we'll spend on? No, I want to see some much more work on that. So this is something that I stress on. Another aspect is, what is the actual viable product? What is the technology? How does it value add? The clarity on that. The pitch deck should not be very vague. Okay, there are some pitch decks I've seen that tell me the sector, that tell me the vague area of how it will help, but I actually don't understand what the product is. And I'm kind of like scratching my head, so what are you selling exactly? If I have to ask that question, there is a problem.
So I know we're almost out of time. I always ask this question of panelists. What are the top 1, 2, or 3 questions that all of these entrepreneurs should ask you guys, you women, before they take your funds?
How are you going to help me post-investment?
Okay.
What's your value add? Where are you in your own fundraising? Where's your money coming from? Do you have money to enter additional rounds?
On top of that, it is after we receive the funding, how you can really help us to grow from funding perspective, partner perspective, talent recruitment perspective, many levels.
I think it was Kostler, I was talking to him one day and he said, he believes that one of the greatest value adds that VCs can help is recruitment. And that's sort of his mantra. He focuses really heavily on that.
It shows on their website. Their recruitment piece is the strongest thing on Kostler's website.
The top 2 things are like value add post investment and who are your LPs, and sometimes those are mixed. If I can say that I have a strategic LP who could be a customer eventually.
One of the prior VCs on a different panel, when I asked that question, he said, "Ask why me," which I thought pretty good question. You'll get a good sense of the conviction there. Any other pearls of wisdom that you can impart? I'm getting the time check here. Any other last minute words of wisdom here for the entrepreneurs in the room?
I'll just say it's a difficult time in everybody's journey to build a business, and it's also a difficult time just macroeconomically right now. But the reward at the end of it is very much worth it. So keep at it.
And also, all this challenge could also later become the opportunity. If you're looking at, for instance, Moderna, the company was formed in 2010, so that is right after the financial crisis. And the Illumina was also formed during a difficult time. So right now, even though a lot of startup companies are dying because of a lot of issues, including especially the funding issue, but that the company that can survive for now, that is they have a less competition. So try to live frugal because you never know what's going to happen next. So you want to have save enough runway for whatever you're going to happen, and don't try now to raise or oversubscribe. It's very common, especially in the life science sector, of the down round is horrible when that happening. So that would be also something to keep in mind.
Excellent. Well, this is such an incredible experience to be on a panel with all women. Normally it's all men and maybe one woman. So kudos to you folks. Rob, kudos to you for putting together such an amazing panel and an all women panel. It really is fantastic. So kudos. We're done. Thank you so much to the panel.
So now it's time for audience participation. First question. Step right up. There you go.
This has been a great week for MedTech. This panel this evening, MedTech Women on Tuesday, so many great ideas helping out the providers, patients, et cetera. One of the things I was interested in is trends from your perspective of who's going to pay for all these great ideas. Is it the provider? Is it the payer? Will it be the customer, the consumer? Just curious about what you think about where most of this money will come from, since hospitals are already complaining about razor-thin margins.
I've seen a lot of both payer and employer strategies. I think the provider is one of the hardest. And a lot of them are leveraging, like we mentioned, the remote patient monitoring. That's one that I've seen as a big strategy in digital health. And so it's starting with those existing codes. And then eventually everybody wants the payer contract. So that's like the gold at the end of the rainbow. We'll see how that goes. That's what I'm seeing in my world.
Well, I think the taxpayer is paying for a lot of that. Medicare, Medicaid is paying for a lot of that. But what's interesting is the self-insured employers. That's something that is a market that's growing. That's paying for some of the healthcare costs.
Hi there. A lot of health and wellness, I think, in the future, and even today, is starting to be delivered. Really, it's more as more of a consumer product. If you think about things like I'm wearing an Oura ring right now. I'm experimenting with the GCM, but I got continuous glucose monitor, but I got it not through my doctor. I just was curious, right? Inside tracker, those things. Those are all consumers paying for them. And in a lot of ways, it's ahead of some of the things that are happening in the more traditional healthcare channels. So my question is, if you have a company servicing that sector that's more consumer focused, where the consumer is likely to pay, what kind of metrics are you thinking about, especially in the early stages, the seed, the Series A stages? What should those companies be looking to achieve? Because they're not pure consumer companies, but neither are they traditional provider reimbursed companies. So how do you see that sector and how we should position ourselves for that? I know you have.
I've done a few consumer products, so I mean, I definitely think revenue is really important. So a lot of times at the early stage, you're looking at D2C, but always understanding for me, like who's in the retail pipeline. So it's like you can start online, but like one of my first investments like started online and had basically no revenue in 2021, and then they had like 3 million their first year of sales with like, and most of that came from retail partnerships. So it's like who's in the pipeline and how that adds to the revenue. But I think the unit economics being sustainable is one of the most important things. So you can like scale and scale, but if your margins are poor, like it's not going to be good in the long run. But I have seen some that are too healthy and they were overcharging for their product, and I didn't think that made sense either.
Thank you.
All right, thank you, ladies, and Roger. What do you think some of the blind spots are around due diligence, and what's the best way to approach that from a technology perspective, maybe sharing resources from team to team?
So just want to clarify your question. Are you seeing from investors' perspective when we do the due diligence, what are the area that we should just pay more extra attention, including? Is that your question?
Yeah, I mean, for example, look what happened with Theranos. It was kind of like people following folks off the cliff, but I think there's an opportunity for market arbitrage.
Good question.
Right?
Good question. Yeah.
Thanks.
Right. So, several things that I want to also mention that easily be ignored by investor. First is intellectual property, the IP. So, a lot of especially small VC are saving this money for doing this patent due diligence. They don't want to spend a lot of money to hire a lawyer to do this. But in reality, is a lot of times when a startup company they present to investor of the already failing patent, but there are definitely some cash there, and this cannot be called by the VC. It need to be seen by the lawyer. So in our case, it's like of course, you have to also consider this from the economic perspective. When we are taking, for instance, like really putting the big check, then this is not the money we want to save. This is the first thing. Second thing is really about the exit route. So before we invest in any company, especially in let's say the medtech or device company, we always want to see whether they already have not only thought about this exit route, but they already in the serious consideration, chatting with either the potential buyer or whatever, for instance, the party want to license out their product. If, like this is our investment strategy, if we don't really see that happening, then probably it's a red flag. We can't just wait for you for like 10 years. We need to be responsible for our LP as well. So that is something. And also customer market fit. Customer market fit meaning a lot of technology. Actually, yes, they are very like a novel and a niche in a sense. However, the team really skip or forget to do one really important part before spend a lot of time, a lot of money on that is to consult with a physician, whether that is something physician can use. So for us, we always go to our network, actually more than one resources, talking with if it's let's say a scientific product or platform product, ask the end user, the pharmaceutical company or the physician, ask several roles, getting their opinion. What do you think of that? So those are quite critical.
And I think from what I understood, it could be like collaborating VCs more closely with each other. And it's like, I love that idea, but in the end, we're competitors. And so like I've been on some deals where I'm incentivized, like, okay, I'm already I'm in with like XYZ good funds. We need another 500K. I'll share my memo in that case. But like, I don't know, there's only a few women's health funds, and if we have the same deals, I don't have an advantage to LPs. And so I used to be super collaborative. I'm not as much anymore. I don't know. I don't know if you have a suggestion.
So what would be, as the funder side, your top factor or factors that you would consider for a company that's in the seed round that is brick and mortar and not specifically tech, that's very scalable?
You're asking the wrong audience because all of us are technology investors. If it's safe for me to say that for everyone here, and there is though, that doesn't mean that investor pool doesn't exist. That's just not who we are here. But there is definitely capital available for those kinds of projects. But it's just you have to look in different capital pools.
Yeah, I think definitely knowing your targeted audience I see clients spending so much time in fundraising and so much of it is wasted on just sort of the wrong target audience. And also some companies are just not VC fundable for any VC. They may be great businesses, great revenue generators, but just not a great fit for VCs.
Thank you very much for all your presentations. And I do understood from, especially from Shubhra comment that when designing a product, it was very important to understand the physician workflow and then also involve them in the process and all that. I was wondering what type of resources that are available right now if we want to take that route.
Yeah, unfortunately, there is not much in terms of organized resources. You just basically have to find someone who's working within the healthcare industry, a nurse, a doctor, and some kind of an allied healthcare professional, a physician assistant, someone who's familiar with the workflows, who's willing to talk to you, be very curious, engage them, interview them, ask them if you can observe them a day of their work. Ask them if you can shadow them, and just try to understand what their pain points are. So a lot of it, you have to take the initiative to do that. Really, there is not much in terms of organized resources, but there are forums where you can find people who are more open to collaborating with the industry, who enjoy collaborating with startups, with founders, with the industry a little bit more. There's an organization called Society of Physician Entrepreneurs, SOP. There are other groups where there's another group called Docs and Hackers. So there are groups like that where people who have a little bit more of an open mind and are willing to devote some of their time and energy in engaging with the entrepreneurial world are more likely to flock.
So something to add to, actually in Silicon Valley, there's also many physician association involving a lot of not only pure physician, but also physician entrepreneurs. Actually, GHIM, actually a Sheetal's organization, they have almost, I think probably 1,000 or 2,000 physicians in different perspectives. That would be one great example. And also for us, for instance, in our accelerator, we have around 100 advisors, including many physicians and also physicians, entrepreneurs in different perspectives, helping the company grow. And actually, this is also our strategy. We believe VC in future should not only just provide the funding source, but also help them to grow. So that's why we also have the accelerator set up together with the fund.
Thank you very much.
Rob's not breathing down my neck there.
Okay, I mean, yes. The reason that we did bring in our VC fund and the platform into picture was we felt that the clinicians, the physicians, were not really a part of the investment funnel. They were not really, yes, they have the money, they are great LPs, but then they were not really involved in how to choose the investments, how to actually value add to the portfolio companies. And that is something our LPs do. Our LPs, yes, they are physicians. Yes, they definitely are a part of our fundraising. But we also bring them and connect them to our portfolio companies where they actually can give their clinical expertise. So the aspect where I was talking about earlier, that one thing we look for in a startup, have they been taking clinical expertise and opinion right in the beginning while developing the product? Let's assume they aren't. That is the value add we bring. We will bring you the expertise. We'll bring you the opinion. We'll bring you the thoughts, the ideas that you need to help develop your final product from the clinical perspective. That is exactly what was the USP of our fund.
Hi, can I ask a flipped question from the last question? So, physician, surgeon with a pain point and an idea, how do I connect from the other end? Any advice? Appreciated.
Bring them to our network. This is also the place we work both ways. And yes, many of our startup CEOs are actually physicians too, who had their idea, they needed more, and now it comes to the other side. So now they actually need help in developing how to monetize it. They are already the clinical and the technical experts in the idea. And that is also something that our fund and our network provides. So yes, we actually give a support system both ways.
And also, so in Silicon Valley, in addition, for instance, the GHIN, they also have the Innovator MD, they have a SOAP, those are the organization that has a lot of physicians that don't have, just have some concept, but it doesn't have anything yet. So that's a great way to network with them. Also, another thing is if you are really, really early, then there are a lot of incubators that are focusing on health tech that you can attend. We're more focusing on the later, after you already have the proof concept validation, but those are places probably can help you also.
I would be mindful how you're designing what you need help with. I think that there used to be this paradigm that there's like the technical guy and the business guy, but I think like if you do define like, okay, I need somebody with sales experience, 2 providers, or something really specific that'll help you, rather than just like casting such a wide net of like, I don't know how to start a company. So a lot of it you can learn, and so I would be really mindful on what you need and the type of person you work with, like co-founder. I know like one of my friends does like super mindful co-founder dating when she starts companies, and I'm like, wow, I learn so much every time I hear her learnings. I don't know how she could like communicate what she does, but I would say be really mindful, because it's like one of the most important, if not the most important decision.
Thank you all for the presentation. It was great. And like you said, to see a female panel was pretty inspiring. Sheetal raised a great point about value add. And I think, Jessica, you talked a little bit around how, you have to have a strategic advantage for your LPs against other VC funds. So why you guys? Like, why as a startup founder would I choose you above, somebody else, I guess?
Well, yeah, so I think kind of like already mentioned this before. So when you, of course, funding is of course like is number one thing. But when you are, for instance, lucky enough to, for instance, be able to choose between 2 VCs, then there are some factors you want to look at. For instance, you want to look at the partners. If the 2 VCs are really everything are the same, like the same like a reputation, both with a deep pocket. Huh? Oh, why me? Okay, yeah, I can be more specific on that. Yeah, so so a partner, you want to choose the partner who's going to be with you for many, many, many years, right? So you want them to believe in you. So that will be definitely first thing. Second thing is what I just saying, that you want the VC can help you to grow in many perspectives. So for us, like for instance, we have build our system, let's say for the portfolio we invest, then we help them from many perspectives. Let's say we have the, from our advisor network, we have the advisors specialized in HealthTech, C-level recruitment. And we have many lawyers specialized in different perspectives. And we have also the big, for instance, from the buyer perspective, let's say from the clinical trial perspective, from also the entrepreneur's perspective, and also many other investors that can really help you grow. So that's why I'm saying, if you're lucky enough to get a different check, then you should see really from the growth part what kind of help you can get.
Yeah, I'll answer more specifically in terms of why me. Number one for me is that you want specifically me on your board, because as a clinician, I will be able to understand what product you're building and how it will fit within the healthcare ecosystem, what would be the best way to sell it, how can you gain adoption, all of that, while at the same time also being able to help you with recruiting, with fundraising, all of that. As a firm, we're hands down the most flexible, deep-pocketed capital that you can have around your table. We don't have any outside LPs. We have access to several billion dollars in capital. If you want to acquire a company, we can do an M&A financing for you. We can fund subsequent rounds of your fundraising rounds, because we don't have to worry about conflicts in different funds. We don't have to exit an investment in 3 years because we need to go raise the next fund, so we can hold for as long as it makes sense for the entrepreneur and the business and not force an exit. So those are just some unique sort of advantages of working with us.
Wow, that's hard to follow.
Shubhra has to go last.
That's right. Well, for us, we don't, as I said, we don't do direct investments with one important caveat. If we can acquire something bigger and interesting that the technology could be a great accelerator, then us could be a compelling choice. But again, Shubhra's firm has that too.
I think for us, it's the combination of understanding of both consumer and healthcare. So I have a bigger consumer background, but also some in health, and my partner's a lot of healthcare experience. So part one is like helping fill out, like if there is room left in this round, helping fill out like the investor syndicate. Pretty active with sharing the deal. Post-investment, it's helping with sales and just general like founder networking if they have a potential collaboration, and then sales with payer providers. We have one of our partners working at Mercer helping on the employer strategy, and then we have the network of advisors who are like mostly physicians but also healthcare folks as well. But yes, we want Shubhra as a LP. So.
Also, just one thing that I should mention. Chemistry is really, really important. You're gonna be, with this investor for so many years, and there are gonna be so many ups and so many downs and so many hard conversations you're gonna have with them, that you've got to feel really comfortable with this person that you're gonna spend an inordinate amount of time with over a significant period of time. And I think making sure that there is an alignment. If you look at the back of that sheet, I put that top 10 mistakes founders make in term sheet negotiations. It's just not having an alignment. Going for the highest pre-money valuation is not necessarily the best fit for you. So I think, what makes these folks the right fit for you is if they sort of check all or as many of those boxes.
I wanted
as
to
possible.
say one thing I forgot when I had the mic up. Sorry, that was great.
Oh,
Look at who else is in the portfolio, and you could, like, one of the questions that you could ask is, like, before I brought a founder to the investment committee, he asked for a founder reference from me, and that was, like, the first time anybody had ever done that. So, usually, like, if you have a good network, you can maybe meet a founder who's in the portfolio, and that could be one of the most real ways to find out how investors really are, too.
And I think it's so incredible that you folks do so much diligence on the entrepreneurs and how little diligence the entrepreneurs do on the investors. It always, I've got like a list of 20 things that if it's an investor that I really don't know or that I haven't done deals with, I'll say, do this diligence, go onto the website, look at the portfolio companies and call some of these entrepreneurs. They're all listed on the website. And say, how was that investor in 2008 when the world was ending, or 2020 when Sequoia came out and said, hey, the pandemic's the black swan and everybody should just, absolutely climb up. There's so much diligence that you really should be doing on these folks that you're going to be living with for a long time.
We have time for one last question. Make sure it's a good one.
Do you think that legislation needs to be changed if AI starts giving prescriptive health advice? I mean beyond Copilot. Copilot would be that the AI engine gives the answer to the doctor and the doctor passes the advice to the patient. But if we go beyond that, where a doctor's cut out of it, AI can give the prescriptive advice, and the technology can get there, will it be blocked by legislation? Is it going to have to change?
It's going to have to. There is no other way. It has to change. It's a matter of when and not if at this point, right? It's something that is coming and will happen probably in phases, probably not all of a sudden and completely, entirely in every aspect. There will be probably a gradual progression. We start with lower acuity things. We start with things that will not kill somebody. Maybe we start with developing more of the technology on as a co-pilot. We do a published clinical trial to figure out if it's really working to the levels of standards of safety and efficacy, just like we do for drugs, before we can hand over our health in its hands. But it will happen.
Yeah, totally agree. Another aspect of that is you accumulate more data, there is a better picture of what you are. So, for example, somebody might like Reese's from Amazon. Yeah, order Reese's and then boom, there's information about those things. Well, do you want that information to get in the hands of insurance companies? They may start discriminating. That's kind of a toy example, but I think it illustrates a broader point. Once we have more data on somebody, there's an opportunity to discriminate against them, and that's not great, and will have to be regulated.
All right, well, let's give it up for our panel. Let's give it up for Roger, our awesome moderator. Let's hear it for Procopio and all our sponsors. Let's hear it for our event team and our video team. Let's hear it for Joe, our bouncer. Let's hear it for our audience. Let's hear it for me. So stick around, network, socialize, and connect. As I mentioned, there is an after party, and once again, here are the possibilities. The Rosewood. I know it's Thursday. The patio. Pizza My Heart. But another option is an undisclosed location. So the winner is, so we're staying here. So Roger said we can stay all night. So we brought out the ice cream, pumpkin pie, cheesecake, and the flan. So talk to our panelists, enjoy the after party. Thanks for coming. Applause.